Peter, the idea that this market is dictating Fed policy to a much greater degree since December essentially forcing the Federal Reserve retreat to patience and then pricing in rate cuts with no real encouragement from the FOMC, and then all of a sudden the FOMC playing catch up. Do you get the feeling the market is dictating where this Federal Reserve goes and perhaps not the economic data?
Yeah, I think that's very true. I think you're seeing it across, both in fixed income, but also the equity markets. I think everyone, including the president, seem to look at the equity markets because it's the quickest measure of some sort of barometer of something. And so we see it every day. It's in your face, and that's where they kind of look to. And as soon as you see performance, they're calling for their help. And I think we're missing the point that the economy and the stock market aren't the same thing, but we seem to be reacting much more to the stock market, bond markets. And one last thing quickly is, I do think people are right to be looking for the next problem. What's the financial crisis? And I tell you, people are looking in the wrong place. It's not going to be high yield. It's not going to be leveraged loans. It's going to be in a safe asset. Every financial crisis we've ever had has really been a safe asset. Look to S&L. Safe mortgages, they just hedge the interest rates wrong. 1998, Russia, people viewed sovereigns as being very safe. They don't default. Long-term capital, trillion-dollar bets on swap spreads, very safe. 2000, 2001, Enron, WorldCom, fraud. It wasn't investment-grade companies going bad. It was fraud, so you couldn't do your analysis. And then the last financial crisis was really the AAA mortgage-backed paper. So I think you're supposed to be looking at what are you really safe and what are you thinking you're leveraging because it's so safe. That's where the problem's going to come.
But you know what? A lot of people are screaming back at the TV right now. They're saying, is it a risk-free asset then? Is it government bonds?
I'm not sure it's government bonds. One thing that's popping up more and more on our radar screen, we're starting to look at some of the commercial real estate. There's some, again, what encourages me right now that we're not in a bubble in any way, shape, or form is we don't see the leverage. We don't see the credit products that we saw back in 2007 and 8. You don't see these leveraged super senior. You don't see synthetic CPDOs, they were called. You just don't see a lot of the really funky products that put leverage upon leverage and created mark-to-market risk. The big key here is there's not this mark-to-market contagion, and it's been reassuring, I think, even last summer when emerging markets were getting hit. Normally emerging markets get hit, it flows into high yield. It did not. So I think people are running relatively safe portfolios. They're aware of the risk they're taking, and you don't get that knock-on effect. So I don't think we're in a risk, and certainly not coming from the financial credit markets.